Hey folks, Fynex here. So this is our fifth class. Okay, in this video we are going to understand the time frames and analysis layer. See, there's many peoples, they know how to do the analysis, how to find the patterns, the key levels, each and everything, but they're stuck in time frames. They can't understand which time frame they need to use for their analysis. Okay, there's like a different frameworks, right, to understand the bias, the trend, understanding the trend. The next one is key levels, the next one is confirmation. So for an example, some people said they're going to plan for the swing trades like a holding for the next 2 to 3 weeks, and they're going to do the analysis in smaller time frame, and they're going to make the big losses. And some people's they're going to look for a smaller time frame like a scalping trades, and they're going to do the analysis in medium time frames and the higher time frames, and they're also making the big losses. So it's very important to understand the time frames. The time frames is going to show you the full data. For this video we are going to understand the four things. Okay, the first one, what are actually the time frames. Okay, the second one, different time frames, different time frames. Okay, the third one is going to which time frame you need to use, to your analysis, for your analysis. The fourth one, align the time frames. Okay, so it's, if you're a beginner trader, it's going to be like complicated things, it's a new words for you, but at the same time, if you're intermediate trader and if you know the time frame, these are the analysis, you can just skip the videos, but you can watch this for like exercise videos or like a training session. Okay, so in this video we're going to understand the four things. At the first, we are going to understand what are the time frames, what are actually the time frames. So here I'm going to mix with the practical and the theoretical classes. Okay, in this video, the first one, we are going to use the software which is called trading view. Okay, it's called the trading view. I'm going to open here. If you don't have this trading view, you can if you don't have the system, the laptops or something, you can just go with your Play Store, so the App Store, and search the trading view, and you will get the trading view applications. You can just download it from there. Okay, and if you're using this any system, you can go with your Chrome or any search browser and search it, the trading view. Okay, it's this one, the tradingview.com, and you will get this website. Okay, so in this website we are going to look at, these are the charts. So these are the candlestick charts. So what is candlesticks? We are going to understand in practical classes. Okay, the first class is going to be like understand the candlesticks. Okay, the candlesticks is showing the datas, the buyers and sellers datas. Anyway, we are going to deep dive in the practical classes, not here. Here we are going to understand the time frames. What are the time frames? What are actually the time frames? Okay, what we mean by the time frames. See, each and every candle is getting created after taking a certain times. Okay, it's called a time frame. For an example, say this, if you take the 5 minutes time frame, okay, 5 minutes time frame, which means a candle is getting created by taking this 5 minutes. Hope you get it right. This candle is getting created by taking this 5 minutes. Okay, if you're taking the 10 minutes time frame, what we mean by 10 minutes time frame, the 10 minutes time frame means a candle is getting formed by taking 10 minutes. Okay, how the candle is getting formed, it's open, running, and closing by taking 10 minutes. Okay, open and running and closing within 10 minutes. Okay, it's a 10 minutes time frame. At the same time, if you take 1 hour time frames, 1 hour time frame, which means a candle is getting created by taking 1 hour. Okay, H1 means 1 hour. Hope you get it. So this is how the time frame actually works. The time frame that's showing a candle is creating by taking this minutes, this timings. Okay, if you're taking a weekly time frame, W1, which is like a weekly time frames, which means a candle is getting created what, a week, total 7 days. Okay, that depends on the markets. If it's a forex or the stocks equities, it's taking 5 days. Okay, 5 days in a week. See, it's a weekends off in these markets. These are the markets is off in weekends. So that's why the weekly time frame, weekly candles is getting created after taking this 5 minutes. At the same time, in crypto, this is a 24/7. Okay, so this candle is created by taking 7 days datas. Okay, what are the datas? We're going to understand in practical classes. Okay, after 10 theory classes, we're going to understand what are the datas, each and everything. So I hope you get it right. The time frame, which means if you're taking 5 minutes time frame, the 5 minutes time frame is showing a candle is getting created by taking 5 minutes. Okay, if you're taking 10 minutes time frame, it's showing a candle is creating by taking 10 minutes. If you're taking 1 second time frame, which means a candle is getting created by taking just 1 second. Okay, if you're taking 1 minute's time frame, which means obvious, right? A candle is getting created 1 minute's time frame, 1 minutes. Okay, hope you get it, right? It's a very easy things. I hope you get it. So in this sense, what are actually the time frame? The time frame, which means it's showing a candle is getting created by taking these certain of timings, these certain of times, open and close. Okay, a candle is getting formed by taking these certain timings, and that's called the time frames. Okay, see, this is a chart, right? Okay, here you can see the chart here. Okay, this is a chart, this is a trading view chart. If you don't have a system, you can just download it, the trading view, in your app store or the play store. Just search the trading view, you will get the application. You can download from there, and you can log in with your emails, and after that you can access this the charts. Okay, so the chart is showing the price data. Okay, we can understand that later anyway. And if you're using the system, any tabs or the laptops or any monitors, the Windows monitor, you can use the Chrome or any search browser, Vivaldi Chrome or like a Microsoft search browser, anything. And after that you need to search the trading view. Okay, you need to search what? You need to search trading view. Okay, and you will get this website. You will get this website, and this website is showing each and every assets, instruments, charts. Okay, it's a candlestick charts. Why it's a candlesticks? What are the candlesticks? These all are called by the candlesticks. Okay, this is a candlestick, this is a candlestick, this is a candlesticks, and these are all the called by the candlesticks. There's like a thousands of different types of candlesticks. We are going to understand in like a practical classes later. Okay, these are just theory classes. We are going to understand what is market first, and after that we can understand how to do the analysis in markets. Okay, that's what we planning in this all the mentorship. Yeah, hope you get it, right? So right now I'm switching the time frame. We can see the time frame here. Okay, in this arrow, see this. Here's I hope you can see it. This is the arrows, right? This is a 1 minute, this is a 3 minutes. You can see the writings here, right? It's a 3 minutes time frame, it's a 5 minutes time frame, it's a 15 minutes time frame, 30 minutes time frame, 1 hour time frames. 1 hour time frame, which means the candle is getting created by taking 1 horse. Okay, 1 hour. The next 4 hours time frame, a candle is getting created the 4 hour. Okay, the candle picture, each and everything is going to be changed. See this. This is a 30 minutes time frame. You can see it's a 30 minutes time frame. The 30 minutes time frame candlestick chart is looks like this. Okay, if I switch to the daily time frame, it's going to be like a different scenario, different picture, different stories going on in daily time frame. Okay, don't worry, we're going to understand each and everything in these classes. Okay, you're going to be understand each and everything in these classes. At the end, you're going to be a trader. Okay, if you experience the market, if you dedicate to learn each and everything from this master class, you're going to be a professional trader at the end of this masterclass. Okay, don't worry. And these are the candlesticks. Okay, if I go to the weekly time frames, which means a candle is getting created by a week, a 5 days. It's a gold chart. Okay, the gold currency, a technical name for the gold is XAUUSD. Okay, XAUUSD means the gold is correlated with AUD CAD. Sorry, Australian dollars. AUD means Australian dollars. Australian dollars means Australian country's currency. That's a dollar, Australian dollar. And that's we pair with the correlate with the gold. Okay, that's what XAU AUD. Okay, don't worry, it feels very confused, very like what we can say rocket science for you if you are beginner trader, but you can easily understand this all the things in coming classes. Okay, it's nothing but a names. Okay, anyway, see, it's a weekly time frames, which means a candle is getting created by a week, taking a week. Okay, if I switch here in this arrow, I can see 1 second candle, the 5 seconds candle, 10 seconds candle, 15 seconds candle. Hope you get it. I'm saying this one for just to understand what are the time frames. The time frames is simply showing that a candle is getting formed by this much time. Okay, if I take 1 minute, see this, the different scenario, different picture, the same chart, the same assets, same instrument, but we can see the different types of movements in different time frames, right? The new people are going to get confused here. If you are intermediate trader, if you know some analysis, it's not a big deal for you, right? You already learned these all the things. It's all the basic things that we can learn from the markets, right? It's all the basic things. It's like a mandatory things. Each and every trader must need to understand these all the things. Okay, anyway, it's a 1 minute time frame, which is like a candle. This is a single candle, right? See this, just a second, guys. Yeah, see this, it's a single candle, and this candle is getting created by 1 minute. There is still a 54 seconds, 52 seconds now. Now the 50 seconds is left to create this candle. Okay, so this candle is getting created by 1 minute. That's called the 1 minute time frame. So the 1 minute time frame is showing like the data from a single candle that's formed in 1 minute. Okay, hope you get it. I can't explain something easier than this. Okay, right now I'm switching the 3 minutes time frame. Come on, answer it. Which means a candle is creating by taking 3 minutes. Okay, hope you get it. Okay, if I switch to the 5 minutes time frame, which means a candle is creating 5 minutes time frame. Each and every candle is created by taking 5 minutes time frame. 5 minutes. Okay, if I take the 50 minutes time frame, which means each and every candle is getting created by taking 15 minutes. Okay, 15 minutes, our real timings. Okay, 15 minutes. Hope you get it. Okay, the next one. There is heavy rain outside. That's why I'm checking my mic each and every time. That's my voice is breaking each and everything, each and every times. Okay, anyway, we can continue from here. So here we are going to understand what are the time frames, right? Hope you get it. What are the time frames? The time frame is simply showing a candle is getting created by taking this much of timings, the specific timings. Okay, a candle. So what is candle? These are all the candles. Okay, you can see the green and red colors. Here I just change the color to the black. Anyway, it's considered as a red color candle, which means a bearish candle. Okay, a bearish candle means in that week, in that year, the market went downside. Okay, and these are the green candles, which means the market goes up. Okay, it shoot up, or the goes up, or it's moving towards the upside. Okay, this is it. The time frame, which means it's simply showing a candle is getting formed by taking a specific timings. Okay, right now we understand what are actually the time frames, right? Right now we can just switch the different time frames. What are the different time frames here in this market? You can trade the stocks, equities, futures and options, commodities, forex, cryptos, stock market, anything. But you must need to understand the time frames. So this is the same thing. If you want to be a trader or the investor, you must need to understand the time frames, candlestick, these are the things. It's all the basic knowledge about these all the things. Okay, we can understand the candlesticks in separate classes from the practical classes. The practical classes are going to start from the candlesticks. What are the candlesticks? How the candlesticks is getting formed? These are the things. Okay. Anyway, right now we're going to understand the different types of time frames. Okay. There's like 3 types of time frames: the higher time frame, medium time frame, and the lower time frame. Okay. The first one is HTF, higher time frame. The second one, MTF, medium time frame. And the third one is LTF, lower time frames. So these are the 3 different time frames we can see in the markets. Okay, this is it. Okay, these are the 3 different types of time frames. So right now we're going to understand what is higher time frame. So the higher time frame is like it's showing like a high datas, the big datas from the markets, from an instruments, from an assets. If you want the high datas, which means we must need to switch for the higher time frames, right? For an example, this is a chart, right? So here is the chart. Right now, if I switch to the 15 minutes time frame, which means our candle is showing what happened in 15 minutes. Okay, what happened in these all the 15 minutes time frame charts, which means it's showing a less datas, right? 15 minutes is not a big deals because market is here from 1990s, 1980s. So if I take just a 50 minutes before, what happened 50 minutes before, it's not a big datas, right? So it's a lower time frame. We can understand the lower time frame. Right now we can understand the monthly time frame. See this, our candle is getting created by taking a month, 30 days. Which means it's a big datas, right? What happened in previous 30 days? That's a big datas I'm getting from the markets. So it's what? It's a higher time frame. If I take the monthly time frame, if I take even a weekly time frame, a candle is getting created by 7 days. See this, I'm getting datas from where? If I zoom out here, this is a current date. Right now the gold is running at this price range. Anyway, if I move my cursor here, it's going to show my say. So before we're going to continue here, see this, it's a price. Okay, in trading view, if you're using the trading view at the first time, you must need to understand the 2 things here. Okay, in this right side, you can see it is a price range. What are the price currently running at the gold versus Australian dollar? It's a $6,865 per ounce. Okay, what are the ounce, TPs, stop loss targets, each and everything, the SL, each and everything we can understand in coming classes, not here. Okay, I'm not going to confuse you more. Anyway, so in this right side, we can see the price range. What are the price? The current market price is 6,865. It's going to move within like a minutes, within seconds. Okay, you can see the price fluctuations, price movements at the right side. Okay, so the right side of trading view is going to show you This is what? This is the prices. Okay, if I switch to any difference, like for an example, if I switch to, it's a silver. Okay, so this is silver, XAG USD, which means it's a technical name for the silver, gold, copper, the commodities, right? So we already understand what are the commodities, what are forex, each and everything, like a second class or third class anyway. So in right side we can see the prices. The silver price for 75.24690 current price, it's going to be move from here. You can just monitor here. Okay, in this bottom side we can see the dates. Okay, in this date, like a 15th September, see this, it's a, if I move my cursor, each and every time we can see the different dates. See, it's a weekly time frame. I'm just switching the daily time frame so it can be easy for you. See this, in this daily time frame we can see in the bottom side. Okay, in this bottom side you can see the 22nd December 2025, it's a 23rd December 2025, it's a 26th December 2025. So it's a like basic things about this training view I'm just explaining here. Okay, please consider this one. So in this right side we can see the price movements. At the same time we can see in bottom side we can see the dates. So what are the prices in different dates? That's what we need to do the analysis here. Okay, in daily time frame, which means a candle is getting creating by 24 hours, which is daily candles. Okay, that's a daily time frame. So if I move to the daily time frame from here to here, I'm getting almost 22nd September 2025 to till date, which is like almost 3 months data here. Okay, not 3, almost 4 to 5 months data here I'm getting from here, which is like, it's a higher time frame. Higher time frame, which means it's showing high datas. Okay, the big datas, high datas. Okay, that's for the higher time frame. Hope you get it right. If we choose the higher time frames, which is like a daily time frame, weekly time frame, monthly time frame, year time frame, these are all the higher time frames, which means it's showing the big datas what happened previous. Okay, because we can trade the gold and silver from the 80s and 90s. If you want the big datas, we must need to do the higher time frame analysis, higher time frame switch. The higher time frame is going to show us the big datas, the high datas, what's happened in decades, what happened in weeks, what happened from the dates, from different kind of dates, like a 4 months, 6 months back, what happened in prices. Okay, how the price is moving from last 3 months, 4 months, or year or decades. Okay, so the higher time frame, which means it's going to give you the high picture, high datas, the big datas, the large datas, whatever. Okay, I don't know how to pronounce that. Anyway, I'm just speaking basic English because that's what I know. Okay, hope you get it right now. Get it right. The higher time frame, which means it's showing the big datas, and higher time frame is very useful. You must need to consider this one as your first analysis. If you want to do any analysis in any instruments, any assets, you must need to come from the higher time frame. What's happened in previous, what's happened in history of that instruments, of that assets. Okay, yeah, the North Star higher time frame is monthly, weekly, daily, define the overall market direction. So what was the market before, and what's the situation currently going on in the markets, and what's going to be happen in future. So that's what you will get from the higher time frames. Simply mean by the trend. Okay, you are going to understand what is trend going on in higher time frame. The trend means, which means you are going to understand the price is moving upside or the downside in a higher time frame. That's it. Okay, we can understand the market structure, the trend analysis in like a 4th module. Okay, it's a first module, 5th video. The 4th module is going to be understand the trends in market structure. The 4th module we are going to upload almost 6 to 8 videos. Okay, so in that video we're going to understand deep dive about this trends. Okay, yeah, anyway. So in higher time frame we can understand the inflation flow. Who are the institution flow. Okay, so we understand in like second classes about the institutions, right, where the institutions getting funds from the mutual funds, from your insurance, from your FDs, from your pension funds. These are you're going to take the terms and conditions. After your terms plans, you're going to invest in these all the plans, and this funds is going to put into the markets by this big institutions. Okay, and these institutions are going to create the trends in the markets, and that trend we can capture in higher time frame. Okay, we can understand what's the trend is going on in higher time frames. So the higher time frame is going to make it a big impact in the markets. Okay, hope you get it. The next one, filter noise. Higher time frame eliminates random volatility found on the lower time frame charts. We understand about the hedge fund managers, right? Hedge fund traders. What they're doing in the markets, they're going to do the big volatile, the big movements in short time frames. That's called volatile. Okay, that's called the volatile. We can avoid this volatile if we do the analysis in higher time frames. Okay, because this hedge fund peoples are going to make the big profits in smaller time frames, like a short times. by making big volatile, big movements in short time, and they're going to make the big profits. So if we do the analysis in higher time frames, we can avoid this noise, we can avoid this volatile, we can avoid this all the traps if we do the analysis in higher time frames. Okay, hope you get it. Okay, we can understand something later. Okay, deep dive about these all the topics. It's just a headline, right? The first videos is going to, you just reading headlines from the newspaper. We can deep dive about these all the newses. Okay, that's it. The last video we're going to understand the institutional traders, hedge fund traders, these are the things, right? We can continue each and everything in further classes. Okay, so the next one, the medium time frame. So medium time frames is going to give a confirmation. So in higher time frame, what you can understand the trend. Okay, higher time frame, you can understand what is trend is going on in the markets. What's the trend is going on in markets. Okay, the higher time frame, there's a three trends in the markets: bullish, bearish, sideways. Okay, we can understand that later. In Doe theory, we can understand rally based rally, drop based drop, each and everything. So in that class, we are going to understand deep dive about these all the trends. Okay, anyway, higher time frame, you're going to understand what is trend. Currently a trend is going on in higher time frame. So the next one, medium time frame. So what are the medium time frame? We can jump into the chart again. See, it's a daily time frame, it's a higher time frame, right? In higher time frame, you will get the more datas, the previous datas, each and everything. See, these are the previous datas, guys. Okay, we're going to understand how to do the analysis by getting these all the previous datas in coming like a practical classes anyway. So we're going to understand the medium time frame. This is a medium time frame, the 4-hour time frame and 1-hour time frames. So these are two I'm using as a medium time frames. Some people are going to use like a 2-hour time frames, 3-hour time frames, and some people are going to use like a 30 minutes time frame as a medium time frames. That depends on their trading style, their trading identity. There's like a 3 trading styles in the markets: scalper, swing trader, day trader. Okay, in the next class we are going to understand what are the 3 types of traders out there in the markets and where you're going to put in this all the markets. One, two, three. So this is it. Anyway, so the smaller time frame, we're going to understand the smaller time frame is like a medium. The medium time frames is going to like that comes in between a smaller time frame and the higher time frames. That's like a basic things about the medium, small, and large, right? Anyway, it comes between the lower time frame and the higher time frames. That's called the medium time frames, and the medium time frames mainly are used for the 4-hour time frame and the 1-hour time frames. Okay, if you're a scalping trader, your medium time frame is going to be like 30 minutes time frame and the 15 minutes time frame. Okay, we're going to understand about this all the scalper, day trader, and the swing trader, and what are the time frames you need to use, what are the analysis you need to use in the next class. Okay, so in this video, I hope you get it right. So the medium time frame is like a 1-hour time frame and 4-hour time frames. Okay, in this medium time frame, so the higher time frame, we're going to understand what are the trend is going on. Okay, in this medium time frame, we're going to understand where are the supply demands, where are the zones, where are the key levels. Okay, so then medium time frame, we're going to understand the key levels or patterns or the supply and demands, whatever. Okay, it's all comes in key zones, key levels. Okay, the key levels we are going to identify in medium time frames. The high time frame, we're going to understand what is trend is going on in higher time frame. At the same time, the medium time frame, we're going to understand what are the key levels we can mark in the 4-hour time frames, like medium time frames. Right? Okay, and is it continue to the higher time frame? The trend is going to align for the higher time frames. Okay, at the end of this end of this videos, we are going to understand that how we can align these are all the time frames for trade setups. Okay, anyway, so the medium time frame, we're going to understand the key levels. It's going to be like a fib levels, the demand and supply, support and resistance, breakout and retest, fake outs, traps, and the next one, order blocks. Okay, next one, what we can say, these are all the key levels. Okay, we can understand, we can do analysis, we need to find in medium time frames, or we can find the patterns. If you are a price action trader, if you are a pattern trader, you need to identify these are the patterns, like a head and shoulder pattern, double top, double bottom patterns, reversal head and shoulder patterns, and flag patterns. So these are the like rectangle patterns, triangle patterns. So these are the patterns you are going to like identify in this medium time frames. Okay, so the bridge, okay, it's a bridge for the higher time frames and for the lower time frames. It's going to give some more clarification about your trade setups. Okay, and in like a medium time frame, we can understand between price ranges, each and everything. That's a pattern recognition. We look for the double bottom. It's for the pattern trader, the price action trader. So here we are not using the price action tradings. We are not using the patterns for our trade setups. Okay, we are using some like a different things. That's you are going to understand. You are going to learn in this masterclass. Okay, the next one is risk mitigations. Wait for a structure shift before dropping to the lower time frames. It's like in higher time frames we got the trend, and we need to confirm that in medium time frame. Medium time frame also the same trend is going on in medium time frames, which means the trend is must need to align the higher time frame and medium time frame and the lower time frames. Okay, in practical classes you're going to understand deep dive about these all the things. Okay, just write it down. Just write it down, these all the things. What is medium time frame, what is higher time frame, what we need to identify in higher time frame, and what we need to understand in medium time frames. Okay, these are the things. So the next one, the lower time frames. This is where the execution comes in. Okay, the lower time frame is an execution. Execution means entry. So what is entry to our trades? If you want to buy or sell, that's happen in smaller time frame or the lower time frames. Okay, the smaller time frame is going to like a mitigation. That comes in 50 minutes time frame. Okay, 50 minutes time frame, 5 minutes time frame, 1 minute time frame, where we find the exact entry candlestick signals. After learning about the candlesticks, we are going to use only the 2 candlesticks. Okay, there's like 100 types of candlestick patterns out there, and we just going to use only the 2 candlestick patterns. Okay, I'll teach you about that 2 candlesticks, and we're going to understand why that 2 candlesticks is very important. That's showing the high datas, that's showing like a high picture, that's going to give like a high confirmation for our trade setups. Okay, anyway, so we're going to use the smaller time frame for the executions, for the entries. Either you can look for the buy or sell, that doesn't matter. Okay, you must need to come from the higher time frame, understand what is the trend is going on in higher time frame. The medium time frame, understand the key levels, reversal, continuation, these are the things in smaller time frame, like a medium time frame, and comes to the smaller time frame to enter for a trades, to confirm something more in smaller time frames. So you get this 3 time frame confirmation for your trade setups. It's going like a high probability setup. High probability, it's like a high winning accuracy trades. Okay, the precision allows for the trigger stop loss, resulting in a higher risk to reward ratio. That's we're going to understand at the end what is risk to reward ratio, how to manage the risk to reward ratio. So the timings is like a lower time frame is enter exactly when the momentum shift. See this. Right now we can come from the 3 time frames. We are not going we are going to understand the 3 time frames here. Okay, first one is higher time frame. I'm coming from the 12 months, 1 year time frames. This is a higher time frame. Okay, in the higher time frame we get the big data. What happened, what was the price for this gold in 1916. Okay, it's a 1916. You can see the dates here. Okay, it's a 1960, it's a 1969, it's a 1973, this is a 2003, 2019. So in higher time frame, which means you are getting the previous history datas. Okay, you can see the prices. The gold was hike here in 1980s, and after that the hike we can see here in 2011. The next hike is currently going on in 2026, this year. Okay, this year we can see the hike. That's the bigger hike, the big momentum, the big price range. Okay, the big momentum that's happened in gold in this year. Throughout this all the history, in history this is the first time gold hit this price range. Right now we are going to switch even a smaller time frame, continuous smaller time frame. Right now this is also the higher time frame, weekly time frames. Okay, weekly time frame, which means a candle is getting created by taking 7 days or a week. Okay, that's what the weekly time frame. This single candle that's creating, taking 7 days, this single candle is going to create or form by taking 7 days. Okay, right now I'm switching the daily time frame. The daily time frame, this is also higher time frame, because we can see the history dates, history datas. Okay, I got cough, guys. Okay, that's why I'm facing some trouble while this recordings. Anyway, so the daily time frame also, this is a higher time frame. So the daily time frames anatomy, which means a candle is getting created by taking 24 hours. Okay, next one we are going to the medium time frame. Okay, 4 hour time frame is going to be like a medium time frame. The 4 hour time frame, a candle is getting created by just taking 4 hours. Okay, see this. These are the 4 hours candles. In 4 hour candle we can just see only this much datas. Okay, this comes to the support, resistance, key levels. These are the things we are going to understand in 4 hour time frame. Okay, here I'm just going to mark something. Okay, this is like an area of interest, right? Next we can see a supply zone which is created from here. It's called the supply zone. Fine. And then what we can see some like a demand zone which is created from here. So these are the things we are going to mark in 4-hour time frames. Okay, the 4-hour time frames we are going to understand what are the key levels, and we are marking some like a key levels, the continuation, reversal. These are the things we are going to understand in medium time frames. Okay, the 4-hour time frames or the medium time frames. The medium time frames, higher time frame, lower time frame is difference for the different traders. I told you, right, there's a three types of traders: scalper, swing trader, and the day trader. For these three traders, they're going to use the different time frames for their analysis. Okay, this is a 1-hour time frame. 1-hour time frame, here also we can see some like a key ranges. Okay, it's like a 4-hour time frame supply zone which is covering from here to here. Okay, if you're a beginner trader, don't worry, we are going to understand these all the things. Then what we can see the resistance. I'm randomly marking these all the things. Okay, right now we are going to switch even a smaller time frame, which is like a 30 minutes time frame and 50 minutes time frame. See this, it's a 15 minutes time frame. In 50 minutes time frame, we are going to understand some of the patterns. Okay, this one, these are rectangle patterns. Okay, I'm not going to use this type of patterns, but I'm showing here. Okay, and at the same time I'm reviewing each and everything, and we can just do the analysis in smaller time frame, which is like a 15 minutes time frame. 15 minutes time frame, what are these? These are support zone breakouts, right? And here we can see a supply zone which is created from here, and then the candles. See, this is a bullish candle, this is a bearish candle. So these are the candle formation we are going to find in smaller time frames, not in higher time frames. Okay, the reversal candles and engulfing candles. Okay, these are the two candles I'm going to use, and I'm going to teach you in this masterclass. Okay, so these are the two candles. We are going to get some more confirmation for our entries. For entries, we are going to use that candles. Anyway, the smaller time frame, we are going to execute the trades. Okay, if I want to trade for the long side, I'm going for the smaller time frame to identify that, okay, it's continuing the higher time frame trend analysis. It's continuing each and everything that's matching for the higher time frames. And the medium time frames reversal or the continuation, that's also matching in smaller time frames. And in smaller time frame, if I'm getting the big candlesticks or the candle confirmation, I'm going to enter for the buy side or the sell side in lower time frame. So the smaller time frame or the lower time frames is going to be like a confirmation for your trades, the entries for your trades. Okay, right now we are going to look for some different charts. Okay, it's a Bitcoin chart. We are going to come from the higher time frames. This is a daily time frame. In daily time frames, what we need to understand, the direction, what is the trend is going on in daily time frame. So what's the trend is going on? The daily time frame, we can see it comes with low lows and low highs. I'm directly marking like this. It's not the trend structure, exact trend structure, just showing. Okay, so in daily time frame, we can see it comes with the low lows and low highs in Bitcoin. Okay, this is a Bitcoin, this is a crypto markets. Okay, the Bitcoin BTC USD, that's a BTC correlate with US dollar. Okay, it's a Bitcoin chart. Anyway, the Bitcoin is running at 71,720. In right side, we can see the prices. In this bottom, we can see the dates. Okay, hope you get it right. Yeah, so this is the daily time frame. Daily time frame, we can see it's going in downside, right? It's coming downside in daily time frame. Right now I'm switching the smaller time frame, which is like medium time frame. Okay, the 4-hour time frame is medium time frame for the day traders and the swing traders. For the scalpers, the medium time frame is going to like a 50 minutes time frame and 30 minutes time frame, and the higher time frame for the scalpers is going to be like 1-hour time frame and 4-hour time frames. Scalpers lower time frame is going to be like 1 minute time frame, 3 minutes time frame, 5 minutes time frame. Okay, that's we are going to understand next class, the deep dive about these all the topics. Anyway, in 4-hour time frame, we are going to mark some key levels, right? So here we are going to find some like area of interest at this place, right? If you are a trend line trader, you can mark this trend line. Okay, you can mark this trend line in medium time frames. Okay, the next one, what are the next thing we can see here? The resistance, which is connecting these all the key zones. Okay, the resistance, it's not the resistance, it's a liquidity. Okay, we can learn about the liquidity concept in coming classes, in practical classes. So the medium time frame, we are going to do some analysis, do some reversal ranges. So what is reversal? See, the price comes here, and after that we can see a reversal that's happened from here. It comes here, and we can see a reversal after taking this trend line support, and it's reversed from here. Okay, it's reversed from here, it's reversed from here, it's reversed from here, and we can see some like a reversal key zones or some key zones in medium time frames. Okay, right now I'm switching even a medium time frame, which is like 1-hour time frames. So what's going to be happen in 1-hour time frame? See this, there we can see a different kind of support zone which is created here. Okay, and then what happened? It's a supply zone. We can see the supply zone which is in 1-hour time frame. The DNA of prices, the compression and the expansion. What is compression and the expansion? It's like a price moving between a range. or the price is getting compression. Compression, which means it's showing that it's like a pressing. The price is compressing in a range. Okay, for an example, if a price is moving in a range like this, okay, it's called the compression. If a price is moving like this, a direction to the upside or the downside, it's called the expansion. The market is always makes the compression, the compression and expansion, the compression and an expansion, and the compression and the expansion. Market always moves like this. Market can't give a momentum like this or continuous compression like this. Okay, so how we can trade here? Yeah, how we can trade here? We need to identify the compression in higher time frame, and we need to wait for our expansion in smaller time frame. In smaller time frame, we are going to execute our orders. We are going to enter for a trades in smaller time frame. Okay, see here, if we take any example, I'm going to switch to the different charts. Each and every time we need to switch the different charts so you can easily understand. Okay, yeah, nothing here. Right now I'm coming from the higher time frame. See this, it's a daily time frame. So the compression is looks like it's moving in a box. Okay, the price is going to be make a momentum in a box like this. This is a compression, right? The compression we must need to find in higher time frame. See this, it's a daily time frame. In daily time frame, the exact same thing we can see here. Okay, just a second. Yeah, we can see the compression here. The price is moving between this box. Okay, it comes up here and it's took the reversal. And each and every time it's taking reversal from here. Okay, or we can draw the box consolidation like this, the compression like this. I'm just removing this one. Hope we get it right. It's an exact example for this. In higher time frame, we are going to look for the compression and expansion in smaller time frame. Right now I'm switching the smaller time frame. Before that, I'm just marking here to come at this place. See this arrow. Right now I'm switching the medium time frame. So the medium time frame, we can see the break from this compression. Okay, the breakout from this compression, it's a breakdown. If any candle, any price that's giving a momentum towards the downside after the consolidation, that's called the breakdown. If a price is making a momentum towards the upside, that's called the breakout. Okay, hope you get it. These are the simple two names, breakouts and breakdowns. So we can see the breakdowns from this compression, and after that we can see the expansion in smaller time frame, the medium time frame, and even a smaller time frame. We can see the expansion after this breakdown from this compression. Okay, say this, the compression, when the price is compressed in a tight range or triangle, it's going to be like a compression, or we can't exactly draw like this. Okay, the price can be move in a compression like this, and after that we can see a quick momentum. After that, it's called expansion. Okay, it's called expansion, and it's called compression, and it's called compression, it's called expansion, this momentum. Say this, expansion momentum, that means markets or the price breakouts or the breakdowns from that compression, and after that it's going to give a quick momentum towards the upside or the downside. It's going to create a rally, it's going to create a trend. Okay, that's what the expansion is doing here. So it's, we can see in higher time frame the compression, and in lower time frame we can see the expansion. So we are going to enter in lower time frame in this expansion, and we are going to make some profits. It's not that easy. Okay, it's not that easy. We are going to do some more analysis, more frameworks, and then we are going to identify the good trade setups. Okay, see, there's a many mistakes people are doing here in this time frames that we can understand here. The first one is tunnel vision. Okay, only looking for the 5 minutes time frame and missing a massive resistance on the daily time frame, which means if there is any reversal key zones that's appear in like a medium time frame or the higher time frame, some people are not going to switch the medium time frame or the higher time frame. They only look for the analysis in lower time frame or the smaller time frame, and they're going to take the entry from here. That can be a reversal zone in this medium time frame or the higher time frame, or the trend against in higher time frame, and they're going to book the big losses. Okay, something it can be like they're going to enter from here to the long side in like a small lower time frame, that's going to take the long side, but at the same time medium time frame it's going to take a reversal. Okay, from here, the reversal zone, the key zones, and what's going to happen, the price is going to reverse from here, and they're going to make the big losses in this trade or their positions. Okay, they enter from here to the buy side, from here to the long side in smaller time frame. They only done the analysis in smaller time frame. They didn't done any analysis in higher time frame, like a medium time frame or the higher time frame. And in medium time frame there will be like a reversal zone. Okay, and it comes to the reversal zone, and after that here they hit the stop loss. Okay, we can understand how to find these all the reversal zone in medium time frame and higher time frame, how to identify these all the trends, what are the market structure, what are the reversal zones, what are the area of interest, supply and demands, order blocks, FEGs, these are the things. Okay, don't worry, we're going to understand each and everything in this throughout the masterclass. It's just a beginning. Okay, it's just a beginning. Stick with us. Consider to subscribe this channel. Okay, what are the two channels? I'll tell you at the end of this video. Okay, the next one is trend fighting, buying on the lower time frame while the higher time frame is clear aggressive the bearish expansion. For an example, if the higher time frame is going downside like this in charts, just consider there's a guy, they only do the analysis in lower time frames and they find some analysis or they chart patterns, anything, and they're going to take the entry from here to the long side. Just consider like this. It's like a crazy things, right? It's like a dumb thing that you can do in this bearish momentum that's happened in higher time frame. So the higher time frame bearish momentum that's created from the institutions. Okay, institutions, they have the trillions and billions and trillions of dollars in their accounts. They can move the markets, they can make the momentum in the markets, they are the moving the prices in the markets. Okay, and we are going against with the institutions by taking a smaller time frame analysis to the long side. Just consider this. It's a bullshit. It's a dumb thing that you can do as a trader, right? So you must need to do the analysis in higher time frames and medium time frames, and then you can come to the lower time frame and find the analysis, find the bias in higher time frame. If the higher time frame is coming down, you must need to look for the trades for the downside, not for the upside, not for the buy signals. Okay, if the higher time frame is going upside, you must need to look for in smaller time frame also the long side or the upside, not for the downside. You always look for the higher time frame trend. What is the trend is going on in higher time frame? Okay, the next one is signal hunting, entering on a candlesticks patterns that appears in middle of nowhere, no higher time frame levels. See this, I know many people saw looking for some like candle patterns like this hammer candle. This is called the hammer candle, this is called the engulfing candle, this one is engulfing candle, engulf this candle. Okay, that's called the engulf candle. We're going to understand in practical classes about this candlesticks patterns. This is the first video, is going to be like a practical classes about this candlesticks. Okay, anyway, some people are going to enter when they got some like a candlestick patterns like a hammer candle, engulfing candle, morning star, shooting star, and Marubozu. Okay, these are the candlestick patterns names. We are not going to memorize these are the candlestick patterns names. We are going to understand what's really happening in that particular areas. Okay, what's the price is really doing there in some places. Okay, for an example, if there is any support and resistance, okay, and price is moving something like this in between these places, we are not going to enter in between these places because it's like a compression, right? We already learned about compression and expansion. So in this compression, we are not going to enter from here. We must need to wait for a breakout from this compression as expansion, or the breakdowns from here at this compression, right? Then only we can look for the trades in smaller time frame. For an example, there is some guy, they don't know about these all the things, about the time frames and these all the things, and this in this compression or the consolidation or anything, the base consolidation, box consolidation, accumulation, you can call it whatever. The concept is single thing, but we are putting like thousands of names, make it complicated. Okay, don't complicate these other things. At the end, I was also memorizing these all the names, but at the end, I really understand that the names can't make you a profitable trader, can't make me a profitable trader. Just understand what's really happening in these places, in these markets. Okay, that's the most important thing. Anyway, say this. For an example, in this consolidation, there's some hammer candles appear here in between these places. We are not going to look for the trades from here. We must need to wait for our breakouts or the breakdowns in this consolidation. Okay, I'm going to call it as a consolidation of the base, not the expansion. What's that? I just forgot the names. Okay, anyway, it's a consolidation. We can take it as a consolidation continuous class. Okay, that's easy for me. That's what I learned. Okay, anyway, see, we are not going to enter by just a single confirmation or random confirmation that's appear from these candlesticks. Okay, the candlestick is created by taking these other time frames. Next one is analysis paralysis, checking too many time frames, monthly to 1 seconds, to getting conflicting signals. This is the most people are doing here. Okay, this is the most people, even my friends, when I taught them the trading each and everything, and when I just looking someone's analysis, even my closest friend, his name is Mustaq, so I taught them what is the trading, each and everything I teach them. Okay, and after that, when I'm looking his analysis, he is coming from the monthly time frame and then weekly time frame, daily time frame, 4 hour time frame, 1 hour time frame, 2 hour time frames, 30 minutes time frame, 50 minutes time frame, 10 minutes time frame, 5 minutes time frame, 1 minute time frame, 30 seconds time frame, like 1 second time frame. So this is a bullshit. Going with every time frames is not a good analysis. Okay, it's not the time frame analysis. Okay, we must need to take only 2 time frames as a higher time frame. Okay, and 2 time frames for the medium time frames, and 2 time frames for your lower time frame or the smaller time frame. Okay, So only the two time frames or a single time frames to understand these other things. If you have experience, you don't need to look for the medium time frame even. Okay, in higher time frame, see, if I look for any charts in daily time frames, I can easily understand what's going to be happening in medium time frame, what's really happening in medium time frame. I don't need to switch even medium time frame. I can directly go to the smaller time frame and just enter for the trades. Okay, currently I'm just holding this trade GBP I entered from here and it's currently going to the short side. The higher time frame, it's in downside, and medium time frame, it comes to the supply zone. Okay, I'm just showing some analysis here. Okay, and the smaller time frame, it's break the last lower high from here, which is a market structure shift, and again it comes to the smaller time frame supply zone, and after taking this liquidity comes to the supply zone, I just enter from here after the MSS in smaller time frame. It's going to be complicated for you if you are a beginner trader. Okay, don't worry, you're going to understand it. You're going to be a trader. Okay, not like me, you're going to be like a better trader like me, because I lost most of the times at my early stage by just joining someone's courses, by just watching some random videos in YouTube's. You are in right places. Okay, you are going to understand each and everything here. The clear picture you will get from here. Okay, don't worry. See, going with all time frames is not the good things. Okay, that's such a big mistake people are doing here. Just take only two time frames that's matching for your identity, the trader identity. What are the three types of traders? Scalping trader, swing trader, and day trader. Okay, in the next class video, we're going to understand who really are in this markets, which trader you are going to be in this markets. Okay, and then we are going to understand which time frames you need to use to become that trader. Okay, that's it. In next class, we're going to deep dive about these all the topics. Yeah, the summary checklist. See, higher time frame, like a daily time frame and the weekly time frame, we are going to understand the bias. Bias means understand what is trend is going on. You need to look for buy or you need to look for sell. That's this confirmation you are getting from this higher time frame. Okay, HTF, higher time frames. And the second time frame, that's a medium time frame, right? Medium time frame. In this medium time frame, you are going to understand what are the key zones, what are the reversal zones that price can touch here and reverse, or the price can break here and come to the retest. These are the key zones that you are going to understand in this medium time frame. That's a setup. Okay, you're going to catch some like patterns if you are a price action trader. If you are like just a support and resistance trader, you're going to mark this support and resistance in this medium time frame. Or if you are a supply and demand trader, okay, it's a supply. If you are a supply and demand trader, you're going to understand how to mark this supply and demands in this medium time frame. You're going to mark these are the key levels in medium time frame. Okay, the next one is execution. That comes in smaller time frame or the lower time frame. These are the both are single thing. Okay, we can say the different names. That's what I said. If you go for any courses, they're going to confuse you by putting thousands of names. The name is nothing in this markets. We can just understand something, some names. We can just memorize some few names to identify the good trade setups. Okay, drop to the 50 minutes time frame. We come from the daily time frame, we understand the bias, and then we switch to the 4-hour time frame and 1-hour time frames, and we understand some setups where it can be reversed, where it can be continue, where it can be a retest, that can price can comes to the retest. Okay, in 50 minutes time frame, we are going to execute an order. We are going to buy or sell in smaller time frame. Okay, hope you get it. So this one we're going to understand in next class. Okay, for different traders, we are going to use the different time frames. That's we are going to deep dive about this topic in next class. That's why I'm avoiding here. Okay, so if you want to join the community, if you want to be the part of a profitable trader, if you want to become a pro trader for the coming years, it's not possible within months or weeks. It's needed your dedications. Okay, if you want to become a profitable trader, you must need to be something different from your current situations. Okay, you must need to be consistent learning. Okay, each and every day you must need to watch some videos. Okay, and practice in markets. The next one, discipline. Okay, discipline must required if you want to become a profitable trader. You must need to write it down. If you enter for a trades, what are the reason for the trade? If you got the stop loss, why you get the stop loss in the trade? If you got the targets, why you get the targets in the trade? Okay, the next one, practice. Okay, practice in the markets. After the classes, you go for the trading view and practice in the charts. Understand the key levels, understand the trends, each and everything. If you want to be part of this our community, you need to trade alone. Okay, I'm going to create a separate community for each and every one. If you want to become a real trader, if you want to connect with the real traders outside and connect with the real traders, and think about the growth in future. Okay, so if you want to connect with me in social, just a second guys. Yeah, if you want to connect with me in social media or socials, just go to the Instagram, search FyNexFX, and you'll get the profile. There's a handsome guy, okay, and you can just follow there, and you'll get the daily my breakdowns videos and some educational videos there. And for the continuation videos, there's a 2 YouTube channels, Fynex. Okay, here you will get full mentorship plus my personal trade breakdowns. What are the reason for my trades, how I hold the trades. Okay, each and everything I'm going to explain in a videos in this channel, Fynex. Okay, just search it Fynex. And the next channel is GreenZone. In this channel you'll get the full mentorship. The 2 channels you'll get the full mentorship, and the next one is plus educational videos, continuous educational videos in this channel, weekly minimum like 1 or 2 videos in this channel. So do subscribe in these 2 channels for the continuous growths, okay, in trading. The next class we are going to discuss about the types of traders. Okay, there's a 3 types of traders. Okay, scalper, day trader, swing trader. You want to be a scalper trader, day trader, swing trader. What are the rules there? How to choose the best trading identity in the here. Okay, the next module, it's going to be like a 6th class. Okay, the first 10 class is going to be like theory classes. Understand the markets. Okay, understand markets here in the first 10 classes. From the 11th class, we are going to in practical classes. Okay, from the 11th class there is no theory classes from the 11th. Okay, the first classes, it's very important. Here you are going to understand about the tradings, investments and the markets. From the 11th classes, you are going to be you're going to in practical classes. Okay, throughout the practical classes you're going to be a profitable trader after these classes. If you dedicate your timings, if you dedicate yourself to learn this and practice in the markets, continuous learning and practice, that makes you a perfect trader. Okay, and something more always something more to become profitable trader. You're going to be shocked after this masterclass. Okay, it looks like very easy. There's a guy sitting in front of screens, the monitors, and he's just monitoring some like a charts and each and everything. You're going to buy and sell in the markets. You're making money, buying supercars, assets. Okay, wealth something, creating wealth something. It looks very easy to buy and sell. Okay, and some people are think that okay, if they have like 1 lakh rupees, 10,000 rupees, they can make millions and billions in the markets by just putting buying and selling orders. It's not work like that. Okay, you are going to be brutally hurt in this after this masterclass, throughout this masterclass. Okay, it's not that easy as you think. It's very difficult. Okay, trading is like making easy money in a hard way. Okay, the hard way is like become a profitable trader. Once you become a profitable trader, it's like you feel like it's very easy. Even I feel like it's very easy, but back in like 2022 I was feel like very exhausted. Okay, I don't know, I'm just a frantic person. I'm going to like emotional for each and every trades. Okay, if a single trade that's hit the stop loss, I'm going to be a frantic person. Okay, I'm going to be like emotionally damaged. Okay, I feel like that. Okay, but after that consistent learning, consistent journaling, each and everything, I become a profitable, like become a break even. Then I realized that okay, I need to improve my risk to reward ratio. Then I improved my risk to reward ratio. I created some strategy by doing some hedge. Okay, and after that, it works in my lifestyle. It works in my life. The trading. I started with a smartphone. Okay, the Android phone. I learned from the Android phone. I was just doing some analysis in my Android phone, like Oppo something. Right now, I'm just having some like big monitors. I'm doing some analysis, and some people are asking that. Okay, yeah. There's some serious question here. Okay, some people are asking that is they can trade in a smartphone, or they need like some monitors, like a 6 screens, big screens, something like that. Okay, I'm going to say that if you have a single big monitor, big screens like a laptop or a single monitor, it's enough for you. Okay, it's done for you. It's enough for you. There's no need, or you must need like a 8 monitors, 8 screens, something like that. Okay, currently I have the different screens. It's because I'm recording on here. I'm recording something like a masterclass. I'm recording my screens. Okay, and sometimes I'm bringing if I'm going outside, like any restaurant, something, I'm going to take my laptop outside. Okay, and if you have even a tab, okay, if you're a beginner trader and you don't have that much money to afford a laptop or the system, you can just buy a tab, guys, even a second hand tab. Okay, in this tab you're going to download the trading view. It's a platform, it's a software that's where you're going to do some analysis. Okay, in these are the charts, and you're going to install your broker. Okay, so in this broker you're going to trade, you're going to place your trade. In last video we discussed about how to choose the best broker. In last video, just a previous video, like a 4th video I think. Okay, we discuss about how to choose the best broker. So you must need to have the broker to place the order in this markets. Okay, so these are the two things you require. Okay, barely required. These are the two things. One is broker, the next one is trading view to do the analysis. Okay, that's it. If you have the tab, it will be a big screens, right? The tab has a big screens, so you can switch to the different time frames here, and you can analyze here in tab. And if you want some like comfortable screens, the laptop would be better. Okay, the laptop would be better. And if you want the big screens, monitor, it's like a what I can say, that's going to give a big screen, big datas in monitors. Okay, that's going to give like a historic datas. If you switch to the monthly time frame, it's fine, guys. If you're doing like a laptop analysis, if you're doing laptop in laptops, that's also fine. A single screen, that's enough. And if you want some like a bunch of setups, that's also fine. That depends on you. If you want to like a monitor the index and the stocks at the same time, it's fine to have like a 2 to 3 monitors. Anyway, if you're a beginner trader, if you're starting in trading, it's not necessary to have different screens. I started with the Android phone. Okay, a single screen, that's a phone, the smartphone. I learned from the smartphone. At the same time, I installed this trading view and broker accounts in my Android phone, and I traded there. Okay, my first profit is like a 56 rupees, just a 56 rupees. And after that, continuous losses and profits, these are the things. Okay, I told you these are my stories in my first video. So that's it. Have a great day. Have a great life.